Hi and welcome to Ticker Property powered by Movinghub. I'm Chris Bondon. On today's program, we'll take a look at what some real estate agents are doing differently when listing a property. Plus, we'll review the top 5 home loans in the market. To help find you some savings, I'd like to welcome Marios Rocker. Marios, welcome to Ticker Property.
Thanks for having me, Chris.
Marios, let's take a look at what the process is when you go for a home loan. There's obviously variable rates, there's fixed rates. Let's take a look at that and let's start from variable.
Okay.
What is a variable rate for our viewers?
Well, a variable rate ideally means that the interest rate that you get for your home loan can go up and down. You know, the first Tuesday of every month, the Reserve Bank meets and we hear on the news the rates are steady or they've gone up or they've dropped. Well, that's what usually happens then. If you have a variable rate, your rate will go up and down along with it.
So in most recent times, the RBA has always said we're going down by a quarter of basis points and down, and we're now into single digits or ones at the moment, less than ones.
That's right.
What is the RBA?
At the moment, they're 0.75%, so less than 1%, and that's the Reserve Bank of Australia. But of course, that's not what we're paying on a home loan. But it's nice to see that the variable rate keeps on coming down, which means that if you are on a variable home loan interest rate, your rate is also dropping.
Fantastic. So what is out there at the moment in the market? So we've got variable rates out there.
Yep.
You pay effectively what you get. If the banks increase their rates, you're paying more. Who's the top lender out there in the market?
Well, when we're talking variable interest rates, we have to be aware that there's different types of products that the banks offer. But if we just look at the real basic home loan variable rate product, we're seeing rates under 3%. And we also have to understand that the banks offer different interest rates depending on how much equity you have in your home. So if your loan is only 80% of the value of your home, we're seeing rates at 2.96% by Citibank. Bank of Sydney are also offering 2.96%. The top 5 are all under 3%. We've got Bank of Melbourne at 2.99. They're one of our major banks, which is nice to see one of the majors at that price bracket too. Non-bank lenders 2.99, and then one of the smaller banks at which is Suncorp Metway at 3.03.
So if you're paying more than say 3% in these examples you've mentioned, the top 5 there.
Mm-hmm.
Is there a catch to those particular lenders where they're obviously giving you the interest at a lower rate than others?
Yeah, well, again, it's the way that the variable rate loan is packaged. So traditionally, there's 2 types of variable products. So you could have a variable loan and it could just be your basic home loan. Basically, you pay your mortgage. If you pay extra, you can take it back out. That's a feature called redraw. But if you go with a lender or a bank that has fully featured loans, which includes an offset account and a credit card, they're called packaged home loans. Now, they could be a little bit higher than 3%, but it all depends on the discount which the bank is prepared to give you for taking that overall package.
And as a customer, does the bank charge you a fee to get those benefits to give you a cheaper rate?
Now, of course they do. Generally speaking, yes. $395 is around about what you get charged. But don't forget, you get a package of benefits. You get a bank account, which offsets against the mortgage. You get a credit card, generally with no annual fees, and you get your home loan. But then you also get other ancillary benefits of paying this once annual fee to the bank. Discounts on insurance, discounts on other products that you have with the bank.
And by paying that $395 fee as such, how much money in interest plus packaged fees and products would a consumer get on average?
How do you mean?
So you pay the $395.
Yes.
As a consumer, am I saving more than $395 or $400? How much more am I saving as a consumer?
Wow. Without getting really deep into the way the discounts work, when you pay that fee, you're receiving a discount off the bank's advertised standard interest rate, and those discounts are quite significant. The end result is the rate that you end up paying, which will be around about 3%. It's all the ancillary products that you get that save you longer term, and they're the sort of things that us as brokers we look at and assess and determine if you'll get more benefits from having a packaged loan and pay an annual fee, or a non-packaged loan where there is no ongoing cost.
Yeah. So you, as a broker, you'll make that decision with the customer. There's no point paying $395 if you're not going to get that.
Yeah, if you
back.
don't need it, absolutely.
Yeah. So you talked about offset accounts before. As a consumer, again, what does the offset account bring to the consumer?
Yeah.
Is it flexibility? Is it the ability to do other things? Can you explain what an offset account is?
Of course. So this is very interesting because an offset account, the term offset and the term redraw often get thrown around, and the unfortunate thing is it's confusing, to know what each one of them does. An offset account is really ideally a bank account. We have bank accounts known as check accounts, we have bank accounts known as savings accounts, and there's this new thing called an offset account. The major difference between an offset account and any other bank accounts is that an offset account does not earn any interest. So you'll put your money in there and you'll save $10,000, $20,000, $30,000 in your bank account, which is called an offset account, but it will never earn interest. Instead though, it will save interest that you're charged on your home loan. So if you have $30,000 sitting in an offset bank account and you have a $500,000 home loan, the bank will look at those two and then charge you interest only on $470,000 of your loan. So effectively, you're saving yourself 3% interest on your home loan, which is equal to the money that you got in the account.
By having the cash at hand.
And you've got the cash at hand. It's
Absolutely.
Liquidity. You've got access to money at any given time. Better than earning 1% interest on the money. Saves you interest on your home loan. It's a smarter thing to do.
And does the bank charge the interest daily? How does it calculate it?
Yeah. Again, when we talk interest rates, we say 3% per annum. But the banks and lenders, they're looking at your daily balance of your home loan every single day, and they calculate the interest every single day. And then at the end of the month, they accrue it and they charge it to the loan. So if you've had money in your offset account throughout the month that's fluctuated, it goes up and goes down, and that's because when your salary hits, it goes up a little bit, you pay bills.
Yeah.
So they're looking at the net difference between the offset account and the home loan every day, calculating the interest, and then they mush it all together, they charge it to you at the end of the month.
So you can't get to the end of the month and go, bang, I'm going to find $30,000 and reduce the loan and then bring it back out again and do something else with it.
And look, and knowing how that works helps you understand not the manipulation, but how to ensure that you get the maximum benefit from having money sitting in that account for as long as possible.
So again, as a viewer or a consumer, you should know what you're getting charged each day by the bank for having that home loan.
Yeah, and it's a real simple calculation. If you know how to do it, it's a very simple calculation.
Yep.
Yeah.
Principal times interest, I assume?
Principal, say your $500,000 mortgage multiplied by 3%. There's your annual interest. Divide that by 365, and there's your daily interest charge. It's very simple. So you know what the bank would be charging you every day.
Yep, I understand. Now let's talk about fixed rates. We've talked about variable rates,
Yes.
whether the rates could go up based on the RBA. Fixed rates, again, you're locking yourself in. Can you explain the fixed rate process as a consumer?
Yeah, absolutely. So a fixed rate is exactly that. You're locking yourself in for a period of time. Now, it can be anywhere between 1 and 5 years, generally speaking. And each term has its own advertised rate. So if you wanted security for the next 3 years, there's an interest rate that's charged for that 3-year period. The great thing about fixed rates is if you lock in an interest rate today for 3 years, and let's call it 2.89%, regardless of what the Reserve Bank of Australia does, if interest rates go up, you're locked in at 2.89%. But if interest rates go down, you're still locked in at 2.89%. So a fixed rate is great only. You don't ever take a fixed rate to try to catch the bottom of the market because you could be bitterly disappointed. Instead, you take a fixed rate and you choose a term just so you know and understand what your cost or your expenditure is for the next 2 years, 3 years, or 5 years. Yeah. And that's what we tell all of our clients. Take a fixed rate term so you know what your budget and expenditure will be over that period. Don't do it trying to catch the bottom of the market because you could be disappointed.
And when you've got extra money in those home loan accounts,
Yes.
can you pull the money out when you've got a fixed rate?
Okay, good question. So, and when a loan is fixed, again, this is why you need to talk with your broker or your bank and understand, because quite often if we get bonuses or tax return and you get this extra money and we do get extra money from time to time that we want to put against the loan. Fixed rates predominantly don't allow you, if you do pay extra, to redraw the money back out and take back your own money. Also, if they have an offset account, generally speaking, the offset feature doesn't save you all of the money that's sitting in the account, doesn't offset the home loan. So you have to be really, really careful. If you do want those type of features, maybe then a fixed rate isn't for you. But again, through a lot of questioning and understanding, we determine the best way to structure it. I like fixed rates. I like the security that a fixed rate offers, but I love the flexibility that a variable rate offers. And if you want a little bit of both, you can quite often get both.
Yep.
You can split your loan and have part fixed, part variable, and get the benefits of both across.
Yep. And what's the split usually? Is it a 50% split, or can someone fix their rate for, say, 80% and then leave the other 20% variable if they think the rates are going to go the other way around?
Yeah. And again, it's horses for course. You can choose whatever way you like. And if you, Chris, have a mortgage of, say, $500,000, you want security for the next 5 years, well, you can lock in $400,000 of that and keep 100,000 variable, because you know over the next 5 years, you're probably going to try and pay off most of that. So we don't want to leave you with a variable portion or a variable loan that's going to be cleared off before the fixed rate expires. Mm-hmm. And fixed rates at the moment, I haven't seen fixed rates like this in a long time. Like, generally speaking, you have a 1 year fixed rate that's different from the 5 year fixed rate. And we're seeing lenders like Bank of Melbourne at the moment, their 1 year, 2 year, 3, 4 and 5 year rate is the same at 2.89%. Citibank are doing the same as well. 1 through to 5 years, I think they're at 2.74%. So we have fixed rates right now that are so cheap. Taking a fixed rate may or may not suit someone, but again, don't do it to catch the bottom of the market. Do it for your own budgeting purposes.
Marius, thanks for coming on the show, and I hope our viewers learned exactly how much they should be paying on a home loan.
Well, I hope so too. Thanks for having me, Chris.
Let's take a short break. On the other side, we'll be joined by Christian Gravius from Collier's Real Estate.
Hi, I'm Jules Brooks, host of Handle Your Own PR. You're on Ticker.
This is Ticker.
Hi, I'm Ali Tarai, host of Future Sport, and you're watching Ticker.
welcome back to Ticker Property powered by Movinghub. With many real estate agents trying to differentiate themselves in the property market, many are thinking outside the box when it comes to listing a property. From prestige cars being used in videos to the most recent, using the Joker throughout the real estate video. To discuss that, we're going to watch a short video of the viral video from Christian Gravius at Colliers Real Estate, and then we'll take a short snippet on how that video came about.
All units advised, we have a male in a burgundy suit dressed as a clown last spotted at the park at Station Street, Port Melbourne. The suspect may be found in the following locations, all within walking distance to his last spotted location: Light Rail, Railway Hotel, Bay Street Shops, Port Melbourne Beach. Or the CBD. Over.
Are you here to buy the house?
Something very unique. To discuss this very video from Collins Real Estate is Christian Gravius. Christian,
Thank
welcome.
you so much for having me.
Christian, what came up? What the idea? The Joker?
It was actually something that we did a year ago with another video of ours. We did Risky Business, Tom Cruise. There was a girl dancing around the house, and the reaction was crazy. So then we tried mixing it up again, and then it just with different videos, just to really just appease the real estate market, if you want to call it in a sense. And then obviously the Joker movie came out. I've got a very, very, very big love, if you want to call it, for the Joker, what he's about. And he's all about obviously pushing the boundaries, upsetting the established order. And I thought, it's a perfect property. It's a perfect time. Why not? Let's get a Joker dancing around. I wish I could be dancing around in the Joker suit, but no one wanted me to do that. So we hired someone else, and it was very good fun.
And was it your idea that you came up with?
Yes.
It's my idea. I'm going to approach the vendor.
Yes.
And here's my idea. How did they react?
It was something where they just kind of let me run with it. They trusted me. I've got a very good relationship with them, and I just said, listen, I've done this once before. I think if I can do it my way with this Joker video, it will literally break the boundaries. And it's exactly what happened. We got exposure on Channel 7, Channel 9, Herald Sun, Daily Mail. It just blew up. It just went nuts. We had, I think we've hit 120,000 views on Facebook. That doesn't include YouTube and Instagram views. It just went chaotic.
So it worked?
It did work, but now obviously we've got to sell it. So that's been, that has helped, get the exposure out to the property, and we've had a lot of people turn up and inquire into the property as well. So I think that was obviously the main thing. Number one, the exposure is brilliant, but as well, obviously lifting up the interest in the property.
So as a vendor, you come up with a marketing cost or a marketing budget, and they're expecting it's going to cost you X thousands of dollars to list on domain and REA and things like that, and you'll come up with a video.
Yes, it's to believe it or not, it's actually much cheaper than chucking it on to all those platforms. So bit of a social media spend, and obviously the organic reach, and it just let it do its work.
And how far into the whole process are you? Obviously, everyone's obviously seen it or hasn't seen it. They've seen it on our show on Ticker. But how far into the process are you? Are you getting some bids coming through?
Yeah, so we're about 3 weeks in. We launched it about 2 weeks ago. That video, kind of working with a fair few buyers. We had an offer. It's a little bit low at the moment, but we're just working with it, and hopefully we should wrap it up in the next week or two.
Yeah. And do you need council permits and things like that to go and film?
No, not at all. It's just get a camera, get a guy dressed up as a Joker, let him dance around, and we're on.
Get your hands dirty.
Yeah, pretty much.
Start dancing, pump some music, and off you go.
Yeah, we're on. So it's been, it's just been crazy.
Yeah. So next steps, have you got anything else lined up in the pipeline?
It's funny. I had the next one that we had a Home Alone video that was supposed to launch this week, but it was something where another vendor saw what I did, gets on the phone, gives me a call, says, Christian, we need to get this done for my property, who was selling his property with another agency, but he wanted the video. So I was going to launch it but we just didn't have enough time, and I didn't want to go in there and obviously not do a great job. So we've pulled that. And obviously now next year we're looking, there's a few properties that I've got my eyes on to do like a James Bond or a Wolf of Wall Street type of video. So there'll be something coming very, very soon.
And the initial reaction, obviously it went viral pretty quickly.
Yeah.
What is it from a social aspect and media that they just grabbed? How quickly did you get
it flew. I think by 24 hours. So in 24 hours. So I think the first 24 hours we hit about 30,000 views online. The reach was going nuts, and I think I remember it was, by 3 o'clock the next day, it's probably not even 24 hours, I got my first call, and then after I went on Herald Sun and realestate.com, then that spiraled into Channel 7 and Channel 9 and Daily Mail and all that stuff. So it was crazy.
Yeah. And from a bidding perspective, obviously there's a few bids coming through.
Yeah.
Do you expect that things like this investment in videos will get more dollars for vendors?
Of course. My big belief is you can't sell a secret, and the way traditional real estate agents have been marketing their properties before, I'm sure you've probably seen it. Hi, my name is Christian Gravius, and welcome to this property, and it's slow pans. It goes for 3.5 minutes. You're bored. After 10 seconds, you're already gone. So by doing this, obviously it's very different where we get our reach, but it's very effective that they're short, sharp hands. You're seeing the property, like for example in that Joker video, we're selling the location, we're selling everything, and you were hooked the whole way through.
How long did it take to film the production? Obviously, there's going to be post-production as well. But how did it take to do the whole thing?
It took about 10 hours. So 10 hours over 2.5 days to kind of get all the shots. When we first recorded, I watched the video and there was just an empty hole in my heart, and I was like, I'm not happy with this. So we went back and we made sure that we were going to fill in the blanks of exactly how we wanted, and by the end of it I was like, yep, this is great, let's go for it. So I actually had to delay the launch of the video as well. I had a bit of a hype up on social media. Everyone's like, where's the video? I'm like, it's coming. So but yeah, obviously I think it did take a little bit of time, but it was well worth it.
And what suburb was it filmed in?
Port Melbourne.
Okay. So you could have come off the Spirit of Tasmania ship maybe next time and come off there.
I was trying to get a police car, but try and drive around in a police car and just add that aspect, but I couldn't organise that one.
You may have needed permits and road closures and things like that.
Yeah, I was trying to push the boundaries, but I'll be definitely pushing as many boundaries as possible with upcoming videos.
Yeah. And in terms of the whole property market itself, we've obviously got a partner, a real-time agent. The clearance rates have increased significantly this time since last year. How are you finding the property market?
Yeah, it's been crazy. I think this week, obviously, was Super Saturday. I think we sat at 78% clearance rates in comparison to last year was like 47 or something.
Correct.
And the properties were flying out the door. They are flying out the door. Like now I've got a late push as well to try and knock out the last few. And real estate agents in general, when I'm speaking to them, the buyers are there. It's all happening. So good signs, real good signs.
And is this the last couple of weeks before Christmas, before it starts to die down in the industry?
Yeah. So there's obviously, really 2 Saturdays to go. And then you've got your back end. I know there's some agents doing auctions on the 21st, which is pretty cool. But yeah, it's all starting to. There's still a lot of movement in the market. So yes, we're heading into Christmas, but agents are still pretty. They got the hammer. They're swinging.
Are you expecting this weekend to be probably the last big one, or is it over now?
Yeah, I think I'm not like, for example, there's a lot of twilight auctions coming up as well. So for example, Thursday 7 o'clock. We're not doing. We haven't organised that, but there are a few agents that I've seen doing that, and they work very well. So I think we can see a very strong push. In December, and then January will be strong heading into the new market as well. So it'll be interesting times ahead.
Christian, thanks for coming on Ticker Property.
Thank you so much.
Well, that concludes today's program. For any information about the show or guests, please visit the Ticker website. Thanks for watching Ticker Property. We'll see you next time.
This is Ticker, your new source for news.